I don't have money. I'm in debt. I cannot risk money anymore. I have to be very calculated. I don't have a plan B. My plan B was plan A.
Ladies and gentlemen, we are back with another episode 12 of the SimCast. And this week we've got a really special guest. This is Karan Khanna, who's with us this week. And we've also got Sam back. Unfortunately, he's got a little shiner under his left eye there. Sam, you might have to tell us a little bit about that story.
Well, I was just thinking last time I did a couple, I had a really bad cough. And then today I've got a nice little shiner and some stitches in my eye. But I'm not always banged up, I promise. This is just an unfortunate rugby incident.
It sounds like it. I think misfortune is trying to take down the SimCast. You had the cough, then I had COVID, and then you've got the rugby incident there.
It's been a rough couple of months for us, yeah.
At least Karan looks like he's doing okay. Karan, welcome to the SimCast, man. We're glad to have you.
Thank you. I'm glad to be here. My pleasure. Thank you.
Awesome. Great, man. So listen, what we'd like to do, we kind of start off, with a background of new guests and just introduce people. It sounds like you've been maybe trading since 2017, or at least like practicing since then or something like that.
Yeah. So
tell us a little bit about yourself.
Yeah. So I basically, I'm from Canada. I was in Canada and I did my university, and during my university, I had my startup in Canada that I had launched. Didn't really go well. So
tell us about that. What was that?
So I launched in my second year of university, right around Instacart. I launched a service in Canada, Ottawa, and we were actually doing pretty good. We were the first year we did $1 million in revenue, and but it was just something where like I saw that Instacart was rolling much faster. We were not even funded. And Canada is a much smaller town, a much smaller country for us to make the shift to US. I just thought that, and I was in university, couldn't quit it. And so I just decided to like let it go and travel for a bit, and came back and was like, I need to figure out how to make more money. I had to pay off some debts. So I didn't know what to do. A friend of mine recommended that you should look into trading. So you should look into stock market. So all I went on Google was like how to trade stocks or how to make money from stocks. And Tim Sykes popped up as a link on there. And then I really got more inspired by the story by Tim Brittany in there. So I looked up Tim Brittany and I was like, wow, okay, it's possible. I don't have a lot of money, but at least if I have the drive and I have the passion and I have the determination, because I can, I might not be the smartest kid, but I can outwork any other person out there, right? So that was the only thing that I came in with that. And I was so bad because I was purely from a tech background that like initially when people used to talk about equities, I used to give you like, yo, I don't want to listen to you. Talk to me about stocks. So I didn't even know the difference between equities and stock. I didn't even know what a broker was. Imagine like just a tech kid, right? A pure tech kid, no idea what financial world at all. So I just came from no background whatsoever, no idea, nothing. I had to start from scratch. So I had to sit and study the first year. I did not understand anything. I read a lot of books, watched a lot of videos. Wasn't understanding.
What, 2017?
So I started in October or November of 2017 with Tim Sykes.
Okay, cool. And how old were you at the time, if you don't mind me asking?
28 at that, 28 or 29 at that time.
So what made you, at that time though, what made you, and obviously you mentioned money, but what made you think you'd actually enjoy this and enjoy this journey?
I didn't. I needed money. I was in a massive debt, and
so you didn't care. It wasn't really. You didn't. If you didn't enjoy it, whatever, you were just gonna pursue and go for it.
So like most of my early teens, I've been paying for my mom and my sister. So for me, it was making sure that I am their backup plan. So I had to make sure that I come through. And the job I was doing in Canada, I basically through the job I was making about 80K. Canadian, but then after taxes and everything, I wasn't left with much. And then I had to pay my mom's rent. Sometimes she would need money. So I stopped a lot of money I owed the government in terms of taxes. And that was the problem.
Right.
So interest was stacking up. And really, I was at a point where I was depressed and I left I left my city, Ottawa, out of like, I was purely depressed. I left Ottawa, Canada, and I decided to travel, backpack, because I didn't have a lot of money. I knew I had a friend living in Orlando, Florida. I had some points on my flight, so I used them to travel for free. I stayed in Orlando at a friend's place, and then I went to San Francisco. I had a friend there, and at that point, one of my buddies from New York, he was in San Francisco as well, and he basically, I saw him on Instagram, and I was like, "Hey, what are you doing here?" So we linked up, and he's my university friend who moved to New York. And then he invited me to visit New York. So when I came to New York, I was here for a week, and all I did one random day in a Starbucks was like, I changed my resume LinkedIn location from Ottawa, Canada to New York City. Next day, I had 3 recruiters reach out to me, and I saw this one of the companies was an asset management. So I work as a software developer for one of the world's biggest hedge fund right now. I was like, okay, this is cool. It's asset management. I would love it. So I decided to join the project. The money was pretty good. So I was like, the money is going to help me also pay off the debt. So I moved to New York City, and I started working, and then started paying off the debt. Around the same time, I was studying a lot. And I thought I was ready to give it a shot in 2020. I had no idea that the markets are going to be this good. Obviously, my performance doesn't show the market. It is because I could have made so much more if I had the knowledge that I have right now back in 2020 with the market we had.
So you were doing, if you don't mind me interrupting there, you were doing asset management?
No, I was doing software development for this for Point72, which is a hedge fund owned by Steve Cohen.
Okay, gotcha. You were doing software. Sorry, I missed that part. Man, that's crazy. So you went from 80K a year in Ottawa to couch surfing, basically.
Right.
Yeah. So trying to pay that down, that debt down, building software for an asset management company. So do you think the asset management company and building that software, did that kind of give you the bug of?
No, I was still studying. I was studying trading. Then I got a job in 2019, mid 2019 in New York City. The only reason I took the job in New York City was because it was a hedge fund, and I was so passionate about finance that I was like, I want to work in this industry, even if it's as a software developer. So because once I started learning how to trade, I started liking it. It became challenging, and the challenge really, I started enjoying it. And obviously, I knew that I'm not ready to make the kind of money I want to make. I had to be patient. And, so I think the universe played a good role in terms of like helping me out, because my salary got bumped to 200K USD, right? Making that one New York trip suddenly, and one day in random afternoon, I just changed my resume location, and suddenly I had a job that week in New York City. So I just took the job, 200K. I was like, this is enough for me to start paying off my debt. And I started paying it off as soon as I got the job, focused on that. But then all my paychecks were going there. So then in January, I bought one of my very close buddies. I just borrowed a little money from him. And I was like, look, I'll pay you back. This is my income. You don't have to worry. Even if I fail, I'll pay you back by March. So I became a little bit of profitable. By March, I had made double my account. And I paid him back, but then I did not have the experience. And I remember around March to June or April or March to May, market had gotten slow. And I was not ready for that slow market because I did not have the experience or the discipline to wait. So I started locating shares, and then prices were high on TradeZero because the only account I could use was TradeZero at that time. So I did not know the 2% rule and things like that. So I was losing money on locates. And I'm glad all this happened when I had a small account, and then I burnt my account down to $800. And then I was frustrated again.
And this was in 2020?
2020, May.
What if I can, let's just rewind a little bit. Were you, when was it that you found Sykes and you actually started studying?
2017, October, I found Sykes.
Okay, so if you don't mind, like, step us through that process. Like, when was the first time you ever put on a trade, and what were you actually doing to study? Were you just reading things? Were you doing simulated trades?
So the first thing, I bought Sykes content. I paid him, right? I started showing up in the chat. I was not understanding anything. I bought, I think, what's this guy, Ross, forgot who, the pumper.
Ross
Uh,
Cameron.
Ross Cameron, yeah.
Yeah.
I did not know who he was back then, but he had a very popular selling book called How to Day Trade.
Yeah.
I bought that book and I was like reading, oh, this candle does this. This is where. So I was like testing it on, on chart. If this happens, for the longest time, I did not know how to figure out support and resistance. I like banged my head against the wall because I couldn't understand what a support and resistance was. I had to like really bang my head many times. And I think a screen time helped a lot as well. And then
and screen time in the sense of like
watching showing up every morning, just watching
even before you were trading, just
even
watching.
before I was trading, because I was trying to understand what's going to happen. I don't have money. I'm in debt. I cannot risk money anymore. I have to be very calculated. I don't have a plan B. My plan B was plan A. I had to succeed, or
I like that, by the way. No plan Bs. No plan Bs in life.
Plan B
A
was plan A.
yeah, and plan C was plan A. I like that.
Yeah. So I just was in debt. So I had to be very calculated and strategically approach this game. So I didn't have much room for error, like many people, because I know some people you have your parents to rely on. My parents relied on me, so it was a much different story for me. So I was treading on a very thin thread, and I had to make sure that every decision is done right. So I had to make sure that everything I do, I have a good understanding of the market before at least a decent understanding that I can say that I deserve a chance to make money. So
I love that.
That took 3 years, you think, or like just studying?
Imagine a guy who doesn't understand what a broker was, so how bad I was. So,
but it shows like such discipline, because like it's so difficult. Like I was the exact opposite. I was like, watch a video, oh my god, I've got to go trade. Oh crap, I lost. And it was like, and that's one of my massive regrets, is actually like listening to you now. I wish I'd met you before, because I actually would have thought, yeah, I should take it slower. I should enjoy the journey a bit more. I should enjoy the difficulties a bit more.
In hindsight, I would say that I didn't have much money either to put in, so all I could do was study at that point. So maybe if I didn't have the New York job, I might have waited mid 2020 to start it, so everything lined up at the right time, at the right thing. I started with the right size. And I did give a little bit of try in 2019 with, just $500-600 to just see how execution feels like when I felt like I'm ready a bit. I really started studying in 2018 because October, I started in 2017. So by that time, it was the year end for me, and really work started in 2018 to 2020. So 2 years, I put in the work, tried trading 2019. As soon as I executed, I lost money. I knew that, okay, that's it. I don't know how to trade. So I had to get back to studying again, understand how to trade, get my emotions in check. And I would say I got lucky a bit as well in the start, because I didn't have much risk management. When I traded, I would be getting nervous, excited at the same time to trade. No understanding of key levels and position management. So that's what happened. I got that initial success and my account started draining back down. And once it drained back down, I just was like, okay, I have 800 left. I'm gonna just go big on this trade. And UAVS was coming up at that point. It went from 1 to 5, I think. And I think I shorted right near the highs, 6x leverage on trade, sized in, and luckily it halted and opened at 1.
Wow.
Oh wow. Okay, cool.
It's crazy.
That's cool.
So take us in, step us through this process, because it sounds like you were maybe not so much, and I apologize for my thumb, by the way, I cut the tip of it off. So if I look funny, holding up one big white thumb over here, it's, I'm not good with kitchen knives, but it sounds to me like you spent quite a bit of time just observing, but maybe you hadn't quite found your setup yet. Is that what I'm hearing? You haven't?
Yeah.
Or did you know? When did you find your A+ setup, the Karan special, and Yeah.
Yeah. So in the start, there was an information overflow. So I understand when every new person starts trading, there's a massive information overflow, right? And it's so much to take in, right? As now we are intermediate, so we can take everything within a split second. I can make decisions, but when you're new, you don't have the capability to do that. So one thing I noticed was that I was seeing that all the stocks that are going massively up come back crashing back down, right? So I wanted to focus on those patterns. I learned that I needed a shorting account, so TradeZero worked. I'm glad that I opened TradeZero at the right time because they stopped opening brokers for Canadians. So I did it at the right time, and I'm grandfathered in now, so I'm good, right, with TradeZero.
Were you in the overseas TradeZero?
Yes, because I was in Canada. I opened a TradeZero International. So that was another good thing. I didn't have to deal with PDT, right?
Gotcha.
Cool.
So
did that affect you at all, not having to deal with PDT? I mean, did you feel like did you ever start over trading because of that? Or
yes. I had a habit of fighting a trade a lot, and I was not willing to be wrong that much. So paper cuts was something that I would try a stock, be wrong, then I'll try again. And I was good at cutting losses quickly, because one thing that I'll give credit to Tim Sykes was that because I was so new, he imprinted this thing, you have to cut losses quickly. He keeps ranting about it. And like being this new thing, I'm very, you can change and mold me. I'm very moldable when I'm new into trading, because I have a brain of an infant, so whatever you tell me, I'll listen. So one thing that I listened was cutting losses quickly. So initially the trade would move 1 cent away from me. I would be like, I'm out. This is cutting losses quickly.
So it's so funny because that's exactly, so I didn't join the challenge, but like Tim Sykes was the person that I first saw on YouTube or whatever it was, and sort of got me, I suppose, excited about the market. And one thing I used to cut too quickly.
Yeah.
Because it was ingrained, cut quick.
Yeah.
But actually, all I ended up doing was just cutting, and then it would work, and then I'd be
exactly.
like,
exactly, yeah. So that happened a bit, and then I had to figure out how to figure out at cutting losses and make sure that you're in the right side of the trade. So that was a more learning experience. But really, that UAVS trade gave me a jump start. And then I remember breakouts were working really well. So, and Tim Gratani was live trading in the challenge chat at that time. Really, that gave me that added understanding his, how he's thinking, because I got to ask him questions. And since I joined the challenge chat, he was there for the first time, active, right? So I really got to understand a lot of his underlying mentality, how he's doing it. He was giving live webinars. I could interact, ask him questions. So that started giving me some ideas. Then I started buying into those breakouts, and everything was working. So my account started growing. In a month, I was up to like $11,000 or $12,000. And then end of June or mid-June came CYTY. There was the stock pump on in OTC market. Literally went from $3 to $10, right? And then I was like, okay, this is massively overextended, and I know that overextension is my A plus pattern. I leverage shorted it. So I have an $11,000 account. I shorted 3,000 shares at $10. And or 997, risking 10. I was like, if it goes past 10, I'm out, and I'll retry again higher. It worked. I made $17,000 from an $11,000 in a single day.
And how leveraged were you in the trade?
I think I was 3x leveraged.
Wow.
Yeah.
So that was your big winner, huh?
That was what changed me from a small account to a relatively big, decent account. Yeah.
Yeah.
That's all it takes, isn't it? Like one account. And do you feel like, though, how would you grade yourself on that trade?
I think I executed it well because I was always aggressive on trying different levels, but I kept taking $100 loss, $200 loss, and then I'll try again next day, another $100 loss, $200, then I'll try again another day. I started shorting it when it was in the 6s. Then I tried it in the 8s, didn't work. Then in the 10s, I was like, okay, I'm going to try it again. I waited for the 10 level push. I shot it at 997, and I'm like, 10 is my risk. That's it. If it goes past 10, I'm ready to cover. I had my cover orders ready, but then it fell down. I was watching it consolidate under VWAP, getting frustrated. I'm like, please, you've been trapping every day. Do not squeeze back up, fail back down. And then we get this really nice afternoon tank, and I covered it along the way, and then I dip bought. I capitalized on my profits from the short side, and then I dip bought a nice size and I made another $4,000 on the bounce, which is, this dip buying is one of the strategies
So
that I
what are
learned.
you doing in that moment? What are you doing in that moment? Are you watching your P&L just like
I'm watching
going?
every tick. I'm watching every tick, and I'm like, yeah, please. At that point, I had the big picture idea. When I have a big picture thesis, I learned something about me. When I have a big picture thesis, I'm willing to let the profit slip away because I am willing to be in the money and then let it slip away and then retry again higher. Be in the money, let it slip away, and then retry higher. Because once I have that range thesis, and even to this day, that is how I trade. If I have an idea about a range, I'm willing to take many paper cuts along the way because I want that. Once I have that initial position, now I will be not looking to cover. I'll be looking to double down on that position. So I'll be adding to my winner and be more heavy with size.
So you're willing to take a few paper cuts on the way up for a couple grand loss when you've got a $70,000 trade lining up.
Yeah.
You want that. You want that big. You want that home run, so to speak.
If I see the potential in the trade, yeah.
And just
awesome.
on that, so you've gone from just to for my mind, you've gone from like an $800. Sorry, I'm British. $800 account to you're near 30K now. How are you like?
I thought he said 70K.
No, 30K. 17K. I made 17,000.
Oh, okay.
Yeah.
Okay. Sorry. I was like, wow.
So that's hell of a shift. And like I know it sounds like you do have that big picture mentality. You're letting it work, but at the same time though, like you went XL on that CYDY trade, even when it went down 40 cents or it's just below VWAP, you're still up a lot. And considering like, I don't know, a month ago, you were at $800. I don't know, is that natural for you just to think, I don't care. I'm thinking big picture.
Slip away. I remember BTX trade. I was leveraged. I had a $150,000 or $160,000 position size on BTX. Remember when it was up all the way, it was in the 60s or 70s. If you guys pull up the BTX chart, you'll see it kept going up, 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 up. I shot it with the fully, crash mentality, and I was up $25,000. I ended the day negative $6,000.
Okay.
It was, but I've learned now. I've added certain more things where I lock in half profits now. I'll lock in half of my gains at least so that it reverses. I'm still out for a small gain or break even. When I was shorting SPRT, I made about $15,000 or $16,000 on the trade eventually, but when I shorted it, I was leveraged on my starter size. That's how aggressive I was. But I'm not aggressive many times. I'm aggressive when those A++ setup comes. I think I had $90,000 in my TradeZero account around that time, and 90 or 100, I don't remember. But I shorted SPRT and I was leveraged on my TradeZero. First short 3,000 shares at 44. And I am looking, it's called green now, right? Or you have the...
Yeah.
I've
got the old SPRT.
Oh, you do? Okay, nice. So if you look at the big red candle day, sorry, the big push day where it squeezed in the afternoon.
What time frame? We were at 9:30 a.m. here?
9:30, yeah, 9:30, 35. We got that morning push, right? So pre-market, initially, I was trying to short it, but I lost about $700-800 on it. So I was like, okay, I'll wait for the open. But that 45, if you see, was a level that failed after the bounce, right?
45?
Yeah, that was the level I was watching, right? And at open, we get a push till 42. So I shorted at 42, and I was willing to risk about $10,000 on the trade. So I shorted about 1,500 shares at 42, risking 45. And as soon as I saw the weakness, then I started hammering more size. And then I think I had a 39 average. The first drop, I was up $15,000. Again, I took a little bit off, just a little bit, but when it bounced back, I was adding heavily. I was loading up my size. Didn't work out. So I exited for a $7,000 loss. Then I started scalping along the trend, made $4,000 again. And then into close, I dip bought a big size. And then the next day morning, I sold it for a $15,000 gain. So
nice. So you were waiting then on the bounce, is that correct?
So yeah, so in the morning I was waiting for that push towards 42 to 45 region, right? So if we run it more, you're going to see that it's going to push till 42 to 45.
Let's just do one
Yeah,
one
if we
minute per
fast
second
forward.
here.
When you're entering these trades, are you waiting for weakness at these key levels, or are you just hitting them, anticipating that they're gonna fail and happy to take the paper
No,
cut?
so I would, yeah, see that spike. I was in that flush. I was part near the top. I was near the top. No, a lot of times I'm attacking into that spike because the thing is that you have to understand, and I'm trying to adopt this mentality for a big account down the road when you're trading with a bigger account. And I think there is one thing when you have a bigger account and you're waiting, you have to have some size into that trend because if when you add into, when you short into those quick moves, and even if, let's say, for that second, you can neutralize the candle, right? And then later you have that decision, that 30-second to a minute decision making time, whether you know the next push is going to happen or not. So you can quickly downsize or maybe add more because you see most of my charts that you'll see, I'm short and I'm right into that failed wick candle, right? And that's what I'm looking for because I'm looking for those fast pushes to help neutralize with other short sellers who are big money out there, and I'm tagging along with them to help neutralize that candle.
So as you shorted that there on that morning, caught kind of the top there, how long were you looking to hold that? Was there not an
No, I was
eventual?
looking for a fade till 20s.
What's that?
I was looking for a fade until 20s.
Okay, you were looking for a fade into the 20s.
Yeah, which we got end of day. Yeah, so then I covered a little bit and then I started adding again into this pops, right? And I think I was reshort 4 or 5,000 shares. And then as soon as it broke the high, I took it off. And then I waited, and then I retried, but this time I got trapped and then I lost about $7,000 into the squeeze. And then I was like, fuck, I was up $15,000 and now I'm down 7,000. But then I let it squeeze and then I figured out, I let the chart develop. I drew my trends and then I started buying along the trend and then shorting along the trend breaks. And then I started scalping that just to kind of recover my money. So eventually I made about 4,500 from being -7 to plus 4,500.
Okay.
But then I saw that I had massive panic into close and that's when I loaded up into that low of the day. I was like into that low of the day bounce and I sold it next day for a nice, 15K and right into I was up at 4 a.m. sold. I was out by 4:30.
Gotcha. So you were basically you kind of shorted the pops here, and
Yeah.
then I guess if we move it forward just a little bit, just kind of speed things up. I thought I remember it kind of breaking high a day.
It did.
Yeah. Okay. And so you covered somewhere in here, maybe.
Yeah, I was out. I was out into this. No, I was out much before. I was out like, imagine like I'm sized in 5,000 shares. I'm not gonna let it slip away that much.
Yeah.
No, I'm just looking at this now because this fits in with my criteria, but I would have been stopped at that hot break at 11 o'clock. That would have stopped me out
as well. But
Yeah,
with that much size, slippage is a cost, right?
yeah,
But then
yeah.
you hit it again, right? After the high a day break.
Then I started scalping along the trend. So if you see there is a trend line going up all the way up, if you draw from the low of the day.
Okay. Let's see from
from here, draw a trend. You're gonna see a trend. Zoom out to a bigger time frame. You're
like
gonna
something like this.
Yeah. Not from that one, but from the second dip, from the second support candle. Yeah, you're gonna see a trend, right? So then I started buying near the trend, and then I bought that first drop, and then I sold the pop. Then I again bought it. Then I sold it. Then I shorted the drop, and then those kind of singles started adding up really fast. And then I eventually made back my loss. And I shorted the trend break.
Cool.
Yeah.
And then you did hit the backside of it pretty hard though, right?
I did not capitalize the full backside. I think I should re-short it when it went under 45. But at that point, I couldn't tell what the trend is going to be on the day. Is it going to squeeze? Is it going to hold green? But then I covered it quick. Once I went under this high of the day from 11 a.m., I added, and then I think I was out for a $2 gain. And then that put me up $4,000 on the day. But then when I saw that huge panic into close, then my mindset changed from shorting to dip buying. So then I dip bought a bit size.
Nice. Cool. Yeah. Interesting. Interesting trade, SBRT.
It's a nice
remember-
flip to go from short to then just scalp it long.
Yeah, and it sounds like you base a lot of this on your trend lines. Is that right? So you're doing a lot of like trend line trading?
Only when I'm scalping.
Only when you're stopping. Okay. So you go more into like a tactical mode when the big picture hasn't kind of played out for you yet?
Yeah.
Cool.
Smart.
Would you say this, in hindsight, like just looking at the structure that we have in front of us here on this chart, like, is this kind of like your A+ setup where you have like maybe this failed follow through?
No, I don't look at it. That's intraday. I don't really care about that failed follow through intraday. My A+ setups are based on the daily chart. Everything, all my plans are based on the daily chart. I don't care what intraday it's going to do. Intradays are just for entries.
Okay. Gotcha. So you're really just looking for that really big extension then on the intraday, or excuse me, the daily.
On the daily, yeah. I don't make my plans on intraday charts.
Okay.
So this is one of John's. John always talks about the prairie dog, and I'm just looking at that, like that 2 p.m. prairie dog just over the shelf of the shoulder, and then just bang, just that clear out. Yeah.
Hindsight, that last wick was a good short, right? Because it went under the pre-market highs and then wicked out and it failed, and then you could have tagged on size.
That's literally what John talks about. He calls it the prairie dog. It just dips his head out and dies, and then it's gone.
Probably an unfortunate name that I've given it there, but it's it's like they poke their head out of the ground, and then they go right back. It's like I don't know, it just kind of fit there. You also kind of see here, Sam, that if I can get rid of my drawing tools, you've got a nice little Keira Knightley special here, Karan. I call this. Yeah. If you've ever watched the what was the movie, Pirates of the
Caribbean,
yeah, Pirates of the Caribbean. So Keira Knightley, they forced her to walk the plank, right? So I call this the plank walk trend line right here. Yeah, where it's building. They're working them out, working out the longs. They're trapping the longs, and then they pull the plug and they send.
I think I flipped short on that last trend crack, but stupid me, I did not hold for long. I think I covered into the dip and then re-added under 45, and then I covered it. I think I covered it too soon, and then I was kicking myself in the head. I was like, "What the fuck? This could have been a big gain. I instead scaled in and built a size." But again, hindsight is 2020 because I did not know it's going to fade till 20s, right? Because the candle.
But that's the thing I think that's so difficult though, because you've got mental scarring from the morning session where you thought it was your setup. It's a great setup. It's great. It stops you out. It can be, I don't know. I just think sometimes it can be so hard to forget about that and just treat it as a new trade.
Yeah.
Because I would have been exactly the same. I probably would have got stopped out. I know even now, like I'm looking at it now and I'm thinking, yeah, it's easy in hindsight to go, oh, I had to trade it amazingly. No, I wouldn't. I'd be stopped out and I'd probably take it off watch and think, nah, I'm not going to trade it. Even though actually this like me and John, we talk trade ideas quite a lot. And this is something that we talk about continuously, the Keira Knightley and the prairie dog.
Well, Karan, do you think that, like, I've got this circled here, this little area where you kind of shifted into tactical mode. Do you feel like that may have, I don't know, kind of put you in a mindset there that?
No, because I have longer term trend lines. So if you go on the 15-minute chart, you'll see that I look for long-term trend breaks, a long-term trend line, and then those are like bigger picture trend breaks. So I went out the bigger picture, and if you see the 15-minute trend broke, right? That big candle that you drew. So if you draw a trend line on the 15-minute uptrending, that uptrend 15-minute trend broke, right? So once that 15-minute trend breaks, I know that the trend has changed. I think that's the. Yeah.
So this trend here?
Yes. Once that on the 15-minute time frame it broke. I don't trade 1 minute time frame trend breaks. I only trade 15-minute. So once that broke, I was short. My only issue was I should have held. I took it off too quick. And I just saw that I'm green after a negative 7K. I'm just like, take it off. And then into close, I was like, into close, so into close, I did bought like 3 or 4 thousand shares around 26. I sold into the first pop. And
Oh,
then
you did buy into the close?
yeah, I did. I was probably sitting right at the ask near pre-market lows.
So you just admitted though, you are like the rest of us, human in that sometimes it can be difficult to switch off from
Yeah.
P&L. I think particularly red days, because if you get a trade and it takes you back to green, I don't know. I think that maybe that's just me, but I think sometimes
I'm
I'm
trying.
quicker on the cover button.
Yeah, I'm trying to get that emotional detachments this next year,
Yeah.
hopefully. Yeah, but that dip, I was in part of that dip right near the lows, and then I sold into the first bounce, and then I think that put me up 4 or 5 thousand on the day.
I'm
Uh,
trying to think what happened the next day. Did it?
Nice little
Gapped up,
$4
gapped up,
the-
and then after hours, I'm like, this is up. So into the close, that fell in right at 8 p.m. into close, it kind of dipped more, and I was sitting to scoop them up, and I just hit the ask. Bought like 15 or 2,000 shares, and then it gapped up like $10 or something.
Oh, and that
Or
was the next day?
next day, and then I like into the gap. I got the first morning spike, and I'm out. I made like 15K into that.
It did gap up, yeah. And then you sold into the spike.
I was out into the spike. I was like, I'm happy. I made my money. I don't want to fight any longer. Yeah.
Yeah.
Cool, man. Hey, thanks for walking us through that trade. That's it's really descriptive of how
Yeah, this
you.
was purely of statistics. The dip buy was purely of statistics. So I tracked that stats enough. So I just like had conviction into this.
Which was that?
The dip buy was purely of statistics. There was a statistical edge in the dip buy. So I had tracked that statistics many times before. So I just like relied on the numbers, and I was like, yeah, the numbers. I've tracked it. I have enough sample size. I'm just gonna long them.
Nice. So let's talk to us a little bit about that, if you don't mind. Just kind of flipping over here to your Kinfo page. Like, how much back testing do you do?
I have a lot of now and more this year. I've been doing a lot more back testing, a lot more data, especially after SpikeIt came. I really it helped me go even more deeper into it. So I've been back testing a lot. Whenever I have time, I go and look at my Excel sheets. I just try to back test. Last 4 months, I was insanely back testing gap and craps because I wanted to add that to my arsenal. I never took gap and crap trades before. So I did not stayed away from them day one runners.
Yeah.
So this year now I have been actively taking a lot more gap and craps, and I think I have a pretty decent win rate on that. Been very selective with my gap and crap plays, and I've been winning most of them.
That's awesome, man. I did want to ask you something because I read where at one point in time in your career you decided to like kind of stop tracking your win percentage, and I see that that you only have like a 43% win rate.
Yep.
And talk to us a little bit about why you kind of shifted away from thinking
that's an over trading issue last year that dropped because like I would be wrong on a trade and then I would go retry, take another paper cut. I would be wrong I would keep fighting the stock, right? So like TradesZero doesn't consolidate all those trades together. Like if I probably did that on Cobra, it would be much higher. But like this is like TradesZero just like showing each trade at a time. But Cobra consolidates it and just.
But it also shows that it doesn't matter. Like your win rate is obviously it's important, but actually it's not. It's largely irrelevant because the important thing is average gain versus average loss, and then obviously total gain. Like
small and I win big. That's all it matters to me. I go small, I win big. I play the big picture. So if I'm losing 5%, I'm making 30, 25, 30%, right?
Yeah.
And I'm adding as I'm winning. So I'm adding more size. So the cumulative gain might be 10 to 12%, but my size would be massive on that trade.
I mean, Kulamagi talks about it as well, because I think he mentions that his win rate, he doesn't track it anymore either. But he's made 100 million now, so he probably doesn't care.
It's like under 30%.
But it's like 30%. And yet he's made 100 million. I think it's something in that ballpark now, which is just insane.
So yeah, I mean, do you think that that's indicative of a strategy where you're okay with taking a lot of cuts, but you really want to hit that home run pitch?
Yeah, so it's my basic default style. So I have a big picture idea in mind. Okay, I know the trend on the day based on my statistics. Okay, so based on the numbers that I've tracked, based on the history of the stock, I know that the close is going to happen. Okay, but we know stocks are choppy, right? You can go two approaches. You can go wide risk, right? And you can let it play out, but then you have used your risk. You can add the top. Different ways to approach it, right? My approach is, I'm fine taking the paper cut because I'm testing out that level, and I'm just testing and seeing what that level does. If it doesn't work, cool. I know what the average spike I'm looking for, right? So at any point, if I'm risking 10 cents, right, and I risk 500 shares here, but then it didn't work, now I'm closer to that ultimate risk. My starter year was smaller, but my starter year is much bigger. Even though I took a paper cut, I have a much bigger starter. I added a year. Now I have a bigger range. That means now I can also add more to the winner. That means, so I look at a paper cut as an opportunity to get bigger size. I actually get happy when I take a paper cut. So I don't mind, because I'm very careful with my first position. I'm really, because if I can get faked out of a position, but at the end of the day, when I nail that top, I'm adding. Classic LGVN chart. If you pull off my Twitter, you'll see I was actually walking through a friend through that. The day I made about 15,000 on LGVN, or sorry, 7,000 on LGVN. Perfect example, right? What did I do? I tested it out with small size pre-market, got trapped. Sure, no problem. I took a loss. Now I added into that quick push in the morning, right? Right at open. That was my first size. But then, as I said, no, right near open on the right near open. That is before that I added, right? I loaded up some size, right? But then when I added, I like adding into those quick moves because it gives me some time to understand the trade. What is it going to push through or not, right? I saw the tape is strong. I started downsizing right away. I'm defense first, right? As what happened, it pushed. I was already downsized. I covered the other size for break even. Reshorted my bigger size. Now I'm short a much bigger size. Okay. I'm waiting for it to kind of show me, should I add to my winner? I did not add to my winner. Instead, it looked like it's going to squeeze again. I am out for break even at that point, but then re-added again a little bigger size up. Okay. And then I'm waiting for the trade to work out. At that point, the volatility slowed down. So now I can better look at the trade. Add it, then add it again. And now I'm starting to add to my winners and take my profits.
Yeah, nice.
Nice.
Funny, it's another little prairie dog over the the shoulder.
Yeah, a little mini.
The only thing was with slow float was that if I would have held through, then I don't know, the risk, the high was very much further. And I was like, man, this can halt and squeeze as well. So I knew the trend, but I still am going to look at the price action and I'll consider the worst case scenario. So.
Yeah, and then it looks like you covered into some of the flushes here. And then you had like a secondary trade up here again.
Yeah, and then recovered into close, yeah.
Nice trade, yeah.
Nice trade. Really nice.
Looks like you might have you moved on from Trade Zero. It looks like I see you using DAS here.
I use Trade Zero as a backup now. So now Cobra, and I just recently also opened Guardian. Because like now with the size I'm trading, because sometimes Trade Zeros can be expensive. So with smaller account, they're great. But like now, like I use the broker that gives me the cheapest locate. So
that's something that as I'm in Investors Underground chat, and that's something that Nate always talks about. He's just like, open more brokers, just so that you can make sure you get the locates or the cheapest ones or whatever.
Yeah,
so
that's what I do. That's what I do.
Smart.
Yeah, no, great trade, man.
It's nice to see that, but I think what's key is that your ability to take a paper cut, and maybe because you look at it like positively as well. Like, actually, I'm glad I'm taking a paper cut because I know I'm going to go XL much higher. Because the issue is that, like, if you didn't take that cut with LGVN, all of a sudden you're open short, you're bent, and you're minus X amount of money, and then you're like, holy shit, what do I do? But I think it's that positivity when it comes to paper cuts that actually really enabled that trade to be so good.
Yeah, yeah. And the same way I made a day before, I made 15,000 on LGBN a couple of days before. Same ideology. If you look at the chart, it's the same process. Any chart that you see, it's the same process repeated over and over again. I could do a lot wrong, and I could downsize maybe if I sometimes I downsize instead of taking it all off. Sometimes I take it all off, right? Depending on this momentum, depending on the float, depending on the market cap, depending on the day of the move. A lot of factors also go into the trade. But if I know if my statistics say that this is a 95% edge, I want to take that paper cut and try much bigger size above because I want to get biggest size on that trade. And to me, it's not the range. I don't look at the percentage gains I'm going to make. I look at the size I can get on that trade. To me, now it's like how much size I can accumulate on that trade.
Yeah.
So I'm a hunter for size. I'm not a hunter for percentage because like if I'm trading, if I know there's a range on the trade, I just want the max size I can get on the trade.
So is it safe?
Lowest risk.
Would it be safe to say then that you really only focus on a couple of trades? Per day.
Yeah.
You're not trading everything that's showing up on the chart. You've kind of got like you were saying earlier, you put together maybe a big picture plan based on the daily, and then you're just looking to execute that. Are there any days when you don't trade?
Yep. I didn't trade for a week this month.
You just didn't see your setup?
No, I just stayed out. A lot of times I won't trade for some like 2 or 3 days at a point.
Nice.
What are you doing with that day then? It sounds like you're probably still working.
So I look at so like when the market is extremely slow, I'll just wake up at 9:30. I'll see, oh, nothing to, I'll shut down the system and then I'll go back to sleep, get my another sleep, wake up at 9:45 or 10 o'clock and then start working. Check back at around 1:30, see if there is nothing hot, just keep working. Eat more because when I'm trading, it's a hot market. I forget to eat. I'm just like,
yeah, I still remember somehow, but yeah.
Yeah. Now, are you trading full time now, or do you still have an extra?
No, I'm working still for a company. Yeah, so it's a good side income. So I want to make sure that I can grow my trading account over 1 million if the market permits. It all depends on what market wants to give.
Cool, man. Well, we're about running out of time here, but I did want to ask you, like, what we haven't really, I guess, other than the adversity that you faced in the beginning when you had all that debt and, doing the couch surfing and things like that, like, what would you say? Because this, if I can go back to the Kinfo here, this looks like a really steady equity curve for your all-time profit. So, I mean, what would you say are like some of your worst or like the biggest adversity that you've had to overcome in your trading career this year, or just
this year was okay. So I've been pretty consistent this year. I think except that huge AMC loss in June, you see that big spike. I made $30,000, and then the next day I lost $30,000, and that was a planned trade. I took on a massive size. I was leveraged big because I thought AMC is going to crack even further.
What was going through your mind when that all happened? Was that pretty humbling, or did it give you any kind of like pause for concern?
I planned for a $20,000 loss on that day because the size that I took was pretty much a big one. So it was, I just gave 10,000 more because over trading kicked in. But eventually it worked what I was thinking. I just got faked out many times, and I was up $17,000 in the market in the morning. I just was thinking that big picture move. I didn't take the profits, and then I ended up red. Sometimes it happens, right? If you're going for the big picture thesis, you're going to take that loss and you have to watch the profits disappear. But you have to see what happens 9 times or 8 times out of 10. The 8 times out of 10, you're going to leave a lot more money on the table if you're not letting them go. So
that's so true, and I think that's one of the biggest things that I've been doing recently is, I've got my plan. I'm expecting it to get to X. If it stops me out, then so be it. But what I'm not going to do is take small profits, because there's one thing that every single trader, like, particularly those there, most people, well, some people, particularly in the early stages, you'll take your profits early, but you never cut your losses early. So you're always getting full size losses, sometimes bigger, unfortunately.
Yeah.
So it's like that, learning that ability to do the same when your trade's winning actually is you need to get the full size. You're never going to bottom ticket or top ticket, whichever way, but it's about actually getting it into that anticipated range.
That's where my 44% win rate doesn't show the performance, because when I'm losing on starters. When I'm winning, most of the time I'm winning on my full size.
Yeah,
so,
but that's why, like I said, like when we said, it doesn't matter. Who cares a shit about, even if that was 10% and you're up 300K.
Yeah.
Who cares?
So
yeah. But how did you bridge, like, it sounds like a lot of screen time, but when we spoke last week on Discord, you mentioned that you felt like you needed something like TradingSim to bridge the gap. Not to make this all about TradingSim or anything like that, but how are you bridging the gap from being a scientist and having all this data?
Yeah.
How do you bridge the gap to actually, this is where I click short, this is where I click long, or whatever?
So I use tape. When it's my setup, tape reading, I'm a big reader of tape as well, right? I can mostly tell a lot of times what's going to happen looking at the tape, whether it's going to make a push or it's going to, sometimes I could be wrong, but a lot of times I'm right, and I can be near the top, at least with some of the size. TradingSim, I came across it when I asked a poll on Twitter, who knows how to backtest tape. Someone told me that look into TradingSim. I looked into you guys and I got the subscription right away for the year. And then I just looked at the tape and I was like, wow, okay, I can go refine my tape, because sometimes I get chopped up reading a tape. So I want to go look at it and understand how can I improve it. Because as much as I'm a statistics-based trader, I'm also a price action / tape reader. I'm a hybrid. I'm not a purely systems trader. I'm a hybrid. I'll use the systems trading approach to tell me the trend on the day, but then I'll use price action to get the most range on the trade. So I'm a hybrid in between two. So that's what I like to do. So tape reading is a very important part of my trading.
Yeah, cool.
Nice. Cool, Karan. Well, listen, man, it's been such a pleasure to have you on the show, and sounds like you, you're obviously looking at your equity curve, man, you're headed in the right direction. So.
Yeah,
yeah,
it's an awesome story. It really is. And,
it's nice. What do you think? 2022 is coming up. What are some of your goals?
If we get a hot market, I want to hit the million. I want to get there. That is my first thing. If I do it, great. It takes off this thing. And then I want to buy my mom the house that I promised her. So I'm going to buy her a house in Toronto, Canada. Once that is done, I can then be like, okay, I fulfilled my promise. Then I can do more fun things in life.
Good for you, man. And you're doing some cool things on social media too. Why don't you tell our viewers how to find you and maybe take a look at some of your trading? Yeah, so my Twitter, you can follow me on Twitter. I think I forgot what my username is on Twitter. It's Karan Khanna 25. My username on Twitter is Karan Khanna 25. You can follow me there. I post my P&L. I'm very open about my profits. I'm very open about my losses. I post my charts, whether it's a losing chart, winning chart, I don't care. I'm not trying to get gratification from people. I'm just doing it because if I want to go review something, I have the chart there on Twitter. So if it helps someone, I answer questions as well. I like to be as open as possible, because feel like, if you're open, you can share the knowledge with the community.
Talking about just on that, you're obviously at the moment you've got a Discord group channel as well, and you're live trading a bit. Is that something you want to progress moving forward, or is it just a short-term bit of fun, give back to the community?
Back to the community for now. I'm gonna kill the channel in 2 days, or on 31st is the last day, and then I'll kill the channel, and then we'll see if I cross 1 million. Then maybe I'll do another one.
Cool. No, that's cool.
Yeah, cool, man. Well, hey, good luck with that. Would love to touch base with you next year once you've reached that mark. Yeah,
it'd be awesome to do a follope.
Yeah,
cross 1 million and do a follow-up. SimCast would be awesome.
Go further than expected. I hope I hit the 1 million and I don't do anything wrong, because you're as good as your next trade. That's what I always say. You can be profitable, but you're only as good as your next trade.
Yeah,
fair enough, pal. Hey, thanks so much for being with us, Karan.
Thanks, guys. It was a pleasure.
Thank you.
Hey, thanks so much for watching. If you enjoy our content, please subscribe to our channel and be sure to like our videos. Also, check out tradingsim.com/blog for more content.